Markets in Nigeria reflecting the mood in Nigeria after that big win against Burkina Faso yesterday. Indeed, the BRVM market is also up 1.6%, so Francophone and Anglophone West Africa feeling good today. The NSE index yesterday was up 33,460 points, 1.2% higher. And let's cross to Diamond Bank to hear from Kayode Tinuoye, Strategy and Business Officer at Diamond Bank, to give us his thoughts on the market rally. Kayode, I know it's a lot more than the football these days, but everybody is talking about the earnings season. We should see that kicking off next week with Guinness results coming out. But your thoughts about the broad market performance these days?
Well, I think what we've seen, what we've witnessed in the market in January up to February is typical of what we would see at the beginning of the year. We saw the same trend playing out last year when the market gained run up significantly in January. We'll see this continue in February, and we've seen investors positioned for anticipation of impressive results for the banks and some of the consumer goods.
Right. Of course, I just tweeted that FBN Capital has said that the recent rally's pace is unsustainable. Of course, all this is happening ahead of those earning numbers, but your thoughts about the sustainability of this move?
Well, I think there should be some caution on the side of investors. We've seen a significant run-up in prices in the Nigerian stock market from Q3 in 2012 up to this moment. When you look at valuation across emerging markets, you will find out that Nigeria is fast converging to that average. Forward PE in Nigerian market is around 11 times, which is very close to emerging market average. Even though when you look at the banking sector, we see the sector is still relatively undervalued relative to emerging market peers. But on the balance of things, you would see that the market is fast approaching that peak that you will begin to look at valuations again and take a second thought about your investing decisions.
Indeed. Now, of course, like I mentioned, it's because of the expectation of results. So maybe we can get your thoughts on that. What are your broad expectations from the earnings season? We know the banks are going to be a key focus. We probably won't see those numbers till perhaps late March. But of course, we begin to see some of the consumer names from next week.
Well, I think there's a huge expectation from the banking sector. Recall that in Q3 2012, they did post remarkable performances in terms of their top and bottom lines. We saw earnings growth that was impressive for the banks. We saw earnings growth that was impressive for the consumer goods sector as well. Stocks like Dangote Sugar and Nestle recorded earnings growth about 50% for Q3. We expect this trend to continue in the full year result that's due to be out in the next couple of weeks.
So is that a standout for you? Is that the big one you're expecting, especially from the consumer names?
Yes.
All right. Okay. Let's move on to the real estate sector. USC Properties, of course, announcing that 30 billion real estate investment trust IPO. It's expected to open in another week or so. Your thoughts about the real estate investment trust as an asset class going into 2013? To what extent do you think this is going to be popular this year?
Well, I think that class of asset has struggled with acceptance from the retail investors in Nigerian market who prefer to gain direct exposure to, direct real estate asset as opposed to rates. We've seen companies that have come into the market to raise funds via rates. We saw Sky Bank via Sky Shelter Fund. We've seen USCN. Now we're seeing UPDC coming out in the market. I think retail investors might not readily participate as much in this market, in this kind of investment, because they're worried about liquidity. If you look at the rates that are quoted currently on the market, they're very, very illiquid in terms of getting in and out. And you recall that it's a closed-ended fund. You need to get on the exchange to get out of those stocks. Right. But the good thing about UPDC is that there is a significant portion that is going to the company, and about 40% is being taken up already. And the rest 60%, we expect some institutional investors to take position. And I think that will be favorably accepted among that class of investors.